Hello, everybody. Welcome to the technical analysis webinar this evening. Before we get going, let's do a quick systems check. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, I've got enough responses. Thank you very much. I can see we're up and running fine. If we have any issues, just let me know as we go along. I'll keep an eye out for any audio problems or anything. All right, so as we get going, keep in mind we're obviously in the midst of the holiday season, heading to the new year. Markets sometimes can be a little bit different or a lot different at times than what you might typically see. Today, it's been pretty predictable. Not a lot of big news today, and the economic announcements for the most part have come in already today. And so what we're seeing are a lot of opportunities for some scalping on swing trading opportunities off of resistance and support if there's not a lot of reason or breaking news to break those, to have breakthrough movements. So we'll go ahead and take a look at what I'm talking about in terms of, real quick, the fundamental news that's driving things a bit, but maybe not strong enough to cause too big of movements. And we'll also take a look, obviously, at the technical analysis on the chart and potential opportunities that you could have already done today, and also moving forward, what some opportunities might be. And so as we move forward, as always, keep in mind, all investments have risk. This includes trading Forex, CFDs, spread betting, etc. No one trade is guaranteed to be profitable. Obviously, we're here because there is a good potential for profit. And if done in certain ways, you can help increase your probability of success and limit your exposure with different methods, whether that's using stop loss or hedging trades that you could set up. And we go over these different types of ideas in the webinars pretty regularly. So I think we all understand there's risk, and maybe a third of traders, something like that. You can see the percentage on this slide that don't end up profiting in the long run, succumbing basically to the small spreads and the overnight interest. And basically, if you're flipping a coin with your trading and you're 50-50, gradually your balance will go down, because if you're winning one, losing one, winning one, losing one, and you're exposing as much risk as you are taking profit each time, and if you don't have something that gives you some kind of advantage, either strategy-wise or knowledge-wise, then gradually you tend to lose. And the idea of you all being here is obviously not for financial advisement. What we go over is not meant to be financial advisement, but you come here for education, hopefully, to improve upon trading strategies and improve upon, hopefully, entry points and exit points, so that you can get to the point where you're winning just enough to beat the small spread, to beat the small interest rates overnight, and to consistently profit in the bigger picture. And that's really, that's what I aim for everyone that I work with directly within my portfolio of clients, as well as here in the webinars. I hope to see everybody improve upon their trading strategies, and hopefully in the bigger picture, be that third or so of Forex traders with us that profit long term. Okay. You can read our full risk disclosure statement on our website, by the way, as well, if you have any interest in that. Okay, so we're talking about technical analysis today. Those of you who've come to my webinars, I think you understand that when we're looking at the candlestick chart and we're doing technical analysis, we tend to focus almost primarily on manual methods of technical analysis. This gives us the most flexibility, allows us to apply what we know fundamentally into where we see potential resistance, potential support, where we see trends, and in the end, where we see potential entry and exit point opportunities for our trades. Manual methods, what I mean by that is drawing our own lines, drawing our own support levels, price levels, resistance levels, trend lines, etc. Indicators can be helpful, and at some point we may throw some indicators on here or there within the webinars, but for the most part we're leaning on manual methods. Any questions you have, any input you want to give, please jump in at any time. Don't wait to the end to ask questions. If I say something that involves too much lingo, I try not to use trading lingo. I try and use commonplace words and ideas. But if I say something that you don't understand, that maybe I'm assuming you understand, let me know. Jump in, or if you have something you want to add, if you think I'm missing an important point that everyone else should hear, please chime in. I'm in the chat box. I'm happy to share your ideas as well. So before we jump on my demo account to look at the live movements, let's take a look fundamentally what's happening today, just to get an idea of which way the wind might be blowing. And today is kind of typical of moving into the holiday season. From what I've seen a lot of times through the years, what you typically expect to see and what you are seeing don't necessarily happen on days like today. A lot of drifting of the market, a lot of movements that don't have a lot of emphasis to them, don't have a lot of carry through. And so this is what I was talking about as we were getting started. Without big breaking news, and with a lot of people maybe going into vacation, the volume of trading being a little less, you can see a lot of reversals off of support and resistance, and I'll show you that. Now, what I mean by at a quick look, okay, we see the futures and the actual markets, Dow Jones, S&P, both futures and standard movements are all in the green, all of them. The markets are feeling enough positive energy that they've gone up today, okay? Stocks, indices, etc. But what about the fear index? Typically the fear index, which is this VIX index, volatility index, some people refer to it as the fear index, typically, as does gold, right? The volatility index and gold tend to drop when the markets are rising, right? They tend to have inverse relationships. When people are feeling good about the markets and buying into the indices, gold tends to drop. The fear index, the volatility index tends to drop. Today, it's kind of mixed, right? We've got the volatility index up over 1%, and we also have the indices up slightly. Okay, anywhere from 5% or 0.05% to 0.25%, pushing towards 0.5%. Some of the indices are up today. Okay, so interesting. Gold's climbing today, and so are the indices, and so is oil, and so is the volatility index. It's a bit weird, right? But none of them are really strong in their conviction of what direction they're moving. You see up very small percentages. And we see here in the headline, S&P 500, NASDAQ scale new highs, Boeing lifts Dow. And if we look at that article, okay, I clicked on it on another window here, we see it kind of talks about that, there's some positivity because there's a phase 1 deal between US and China that could be signed sometime soon. So that's helping lift the market slightly. But it also goes on to say that they don't expect a lot of strong movement through the end of the year here, if you read into the article a little bit further. So some positive feel, but nothing that they expect to break necessarily according to this article that's hugely unexpected or to have some huge breakthrough type movement. That's the idea of this article as you read through. Take that for what it's worth. Nobody's right 100% of the time, right? But that's the feel here in this article, and that's really what we're seeing. The article says that, and the movements actually show us that. Some positive feel about US-China, maybe making these movements green, but they're not very much green. Just a small movement up, okay? So that's something to keep in mind. And then if we look maybe at another source of information, we'll take a look at Reuters here. U.S. businesses spending on equipment weak, but housing regaining footing. Kind of mixed. Housing numbers better than expected. Business spending kind of lower than expected. So again, mixed bag. Makes for kind of equal up and down movement. Not huge breakthroughs so far today on resistance and support levels. So overall, it's setting up for a nice day for swing trading. Okay? By swing trading, I mean no big breakthroughs with a sustained run in one direction necessarily, but maybe expectation of when it hits significant resistance or support, reversing and respecting those price levels and moving back in the opposite direction for a while, giving opportunities for potential scalping. Okay? Type okay if you're with me so far, or if you have any questions. And we can look at some economic announcements as well. If we look at the economic calendar, what came in today, right? So some positive news out of the European Union, low-level announcements, nothing big. Okay, these are one bullhead, low impact expected from these announcements. They were better than expected, but no big deal. Japan had a low-level announcement that was worse than expected in the wee hours of the morning, depending where you live, maybe a little later in the morning. But low-level announcement, no big deal there either. We've got some numbers that came in kind of flat out of the U.S., okay, core durable goods orders, worse than expected, and that's on a high-level announcement, 3 bullheads. So maybe that's why we don't see the NASDAQ, the Dow Jones, the S&P going on another bull run up. Positive news with U.S.-China, expected to sign a deal here in the next week, but some kind of negative news out of the U.S. economy kind of flattening out the momentum, okay? Fazile, I'm not sure how you're going to connect your phone to your Bluetooth. I don't know. It's not my expertise there, but good luck. You may just put your speaker on maybe if that's going to work for you in the short term here. Okay, so then there were some new home sales, and we already read the article, right? Out of the U.S., better than expected. New home sales were expected to go down, right? Negative 0.3 and actually went up over 1%. That's really good news. Okay, followed by bad news on new home sales for November. So month over month, better than expected, okay, in terms of new home sales. And then for just the month of November, a little worse than expected. So again, mixed bag, right? Some good news followed by bad news. Nothing that's going to necessarily make you say, I expect a huge run, 300-point gain or something on the Dow or whatever the case may be. And we're seeing that in the numbers, right? We're seeing it here. Some momentum, but not much. Okay? So we might say there's a light breeze up on the markets, but not strong. All right, so we kind of get the idea, mixed bag. Most of the announcements today are done now. We have something out of Japan much later, a monetary policy, 6:50 in the morning, New York time. I'm sorry, 6:50 in the evening, New York time, which isn't for some time now. So we're kind of cleared up of any announcements coming now from the economic schedule to mess up any movements that might be occurring right now, technically speaking, okay? So with that understood, let's go to the charts. Let's see what's going on. So here's crude oil. These are the 1-hour candles. So we see overall today, crude oil's up, okay? Crude oil's up today on the day. It's also approached a resistance point right here and predictably slowed. Okay, you see resistance, resistance, breakthrough candle. It took momentum to break this price. Okay, resistance, resistance, breakthrough, right? Then it became support. And then in order to get below this price, look at the size of the candle, breakthrough candle. It took momentum. Today, do you expect a lot of momentum? This type of movement to break through this price level. To get up, it took a huge candle, huge momentum. Must have been a major announcement of some kind that caused that to occur, or a major headline broke. Then major momentum it took to break this price level right here. And then it acted as resistance again. Resistance, resistance again here. And it's sitting just below that price. So the last 2 times, Farhana, it's okay if you're late. If you have any questions, let me know. If you expect major momentum, look, you could have a breakthrough candle, right? It's a significant price level right here, 60, around 60 and a half, 60.6. It's been a breakthrough level on the way down. It was a breakthrough level on the way up. And other than that, it's been resistance or support in the recent days, okay? So what do we expect to happen now? Well, so far today, we haven't had huge movements. Harold, I did a sound check when we first started, and everyone said it sounded okay. So check your audio on your side. If it sounds like I'm really far away or you're not hearing me good, maybe turn the volume up. Okay, so let's take a look at the small candles. If we're looking for, yeah, Paul, you're saying you think the price will drop off the resistance. Without big news today, that makes sense, right? That's a potential move that might occur. So let's look at the smaller candles then. 15 minutes, 5 minutes. What do we see on 5-minute candles? I see resistance. Okay, right where we drew the resistance. Resistance, resistance. Okay, market's tightening. You see this is going downhill. Whoops, let me draw a better line. Market's tightening here, down and up. For some reason I have to click twice half the time. Okay, there we are. So what we've got now is a very tight ranging movement. This wick here, this big drop off, this wick was predictable because that was the 1 hour candle resistance going back days and days. Okay, when you're looking at 5-minute candles, you might say, wow, that's a breakthrough of this resistance here, and then you might buy. But when we looked at the 1 hour candles, we could see, this actually, the reason this, after it broke this resistance level here, the reason this backed off and stopped climbing, that's the resistance level we drew from the 1 hour candle. Okay, so this was predictable that when it hit this price, it would maybe back off and not keep climbing right away. Now, if you feel that the news today isn't huge, that things are going to keep ranging, you could take a shot at a market sell because it's right on the 1 hour resistance. Okay, if you did take a market sell, and I'm not saying you should, I'm saying based on the news, if you decided to take a shot at a market sell, where might you put your stop loss so that you have a limited exposure? Technically speaking, on the chart, what might make sense if you took a market sell right now? Where might you put a stop loss? Yeah, just above the resistance makes sense. Several of you are pointing that out. Now, I tend to wait for confirmation before I make a move, right? I'm saying you could make a market move, sell, put your stop loss somewhere above the resistance up here and have very limited risk with a much larger potential for a pullback maybe to this support level down here. This is the closest support level down around 60.17. Okay, so if I was taking a market sell, stop loss up here, take profit maybe somewhere just before this support down about 60.2. That's a scalping move. Now, what am I talking about saying I'm waiting for confirmation before I get in typically? Rather than doing a market sell right now, what could you wait for before you sell? And I'll show you there's a bit of a support level right here. You see support, support, what might you wait for? Some of you are saying the next candle. Okay, it's an idea. That's not how I tend to do things. The next candle is not so significant to me, but if the price level breaks this little support level right here, that might convince me that a downtrend has started. Yeah, exactly, Paul. Breaks the next support. And by the next support, now we're scalping right now, right? This is a scalping concept. So I'm not talking $1 down. I'm talking, what, down 15 cents, 12 cents in the price. So if it drops and breaks this little support level, now maybe I'm convinced that we'll get some momentum down to the next support level to go after a quick scalp profit with maybe a 30 or 40 cent drop after I get in. Okay, so right now you see it's testing the resistance, testing the resistance. Does it make sense to trade down before it starts downtrending? Exactly, Paul, a sell stop. So you could put a sell stop right about here, right where I drew this line. sell stop to sell if it breaks the support, maybe at about 60.48. Good idea. That's one option, right? You could place a sell stop just below the support at a spot that you would feel convinced that, okay, a downtrend has started now, then you get in. So a lot of times you can avoid getting in too early on a movement by waiting for confirmation of a breakthrough, okay? And when I'm saying breakthrough, I'm not talking on the 1 hour candles or the 4 hour candles or the 1 day candles, not on a day like today, where the movements have been kind of ranging and soft. So what I'm talking about is a breakthrough on, in this case, 5-minute candle to go after a short scalping opportunity. Now, if let's say it breaks the support, it triggers your sell stop. Where could you program your stop loss if you entered down here? Where might you program your stop loss if you enter on a sell stop after it breaks that support? Above the first support, or, Alex, to widen your strike zone to get rid of, because what happens sometimes, it breaks the support, you enter on a sell with your sell stop, then it just, it has a little wick that comes up and then it drops further. And if it hits your stop loss, you miss the movement. So to widen the strike zone, okay, yeah, Fazile, you could use Fibonacci numbers and levels. That's for another webinar. Maybe we'll do Fibonacci levels in the future. There's a tool I like on TradingView that uses Fibonacci levels. Maybe we'll take a look at it next week. But for now, I'm talking support resistance levels, which many times match up with the Fibonacci levels, Fazile. If it triggered your sell stop down here, to avoid a false signal on the way up before it drops further and hitting your stop loss too soon, a rule I use a lot of times is I take a trade size that allows me to put my stop loss not up one resistance level, but up above the second one. So I might put my stop loss up here and say, if I enter on the breakthrough here on a sell, then I'll be patient enough that just because it breaks above one resistance level, I'll stay with it. And I'll only get out if it breaks above the second resistance level and hits up here, then I'll get out, because then there must have been a more significant climb upward. Exactly. I'm putting, in this case, Paul, above the 1 hour resistance that we drew. It doesn't have to be the 1 hour resistance. In this case, it is. But on the 5-minute candles, I'm at least finding 2 resistance levels to put my stop loss above. And if I say, well, then I have to put my stop loss further away than I like, well, then take a smaller trade if you don't want to expose that much, right? If the stop loss is twice as far away as you're willing to risk, well, then take half the trade size maybe. And now you can put it at a more ideal location to be more patient, widen the strike zone to be more patient on the stop loss so that you don't get caught. And I know a lot of you who do a lot of trading have had this happen. The breakthrough happens, you get on the sell stop, and then it tests back up like that, hits your stop loss, and then drops. And you say, oh, man, I missed it. I had my stop loss too close. So don't be greedy necessarily. If in the concept I'm talking about here, don't necessarily say, oh, I want to take a huge trade, so I only want my stop loss a little distance up. You can be more patient with the movement if you take a smaller trade maybe. Just an idea. I'm not telling you you have to do that, but just an idea. Now, look at the movement right now. Had you taken a market sell and put your stop loss up here, you already hit it, didn't you? You'd have already taken a small loss because you got in before there was confirmation of a downtrend, right? So we're seeing in real time, you can avoid these false signals. And in the bigger picture, I believe this is probably a false signal. I think that break of this, you see, it didn't break the 1 hour resistance, did it? So had you put your stop loss above the 1 hour resistance, you still would be in it. But boy, it's getting close, right? It's getting close to hitting your stop loss if you took a market sell already. In hindsight, it didn't hit it yet. It wouldn't have hit your stop loss yet on a market sell because this was our 1 hour resistance and your stop loss would have been somewhere above that, maybe up here. But still, that's a little too close for comfort maybe sometimes to say, I took a market sell and now look, it's almost hitting my stop loss and you think I got in too early. again, how do you avoid getting in too early many times? Find someplace that's going to confirm a downtrend before you get in on that sell in this case. And many times that helps you avoid the testing of the resistance, and you wait to get in until the downtrend actually starts. Type OK if you're with me so far. Basically, you're willing to sacrifice this distance of potential profit in order to avoid the false signals more often. Okay, good. So what you'll probably find in the bigger picture, if you avoid, let's say, I don't know, a third of the false signals, a third of the time when there's going to be a spike, hit your stop loss and then drop. If you can avoid that, even a third of the time, you may see a huge increase in your overall profit margin, even if by being more patient before you get in, you're giving up a small distance of the potential profit. Okay. All right, Aruna, I'm glad you can hear again. The audio, I don't have anyone else complaining, so I think the audio is okay. Maybe I'll try to move around a little bit less. Maybe my Bluetooth is getting disrupted a little. If anyone else has problems, let me know so I can see if there's a trend here. Okay, so let's take a look maybe at another asset. We've got an idea of something you could do here with crude oil if you expect maybe a little bit of a pullback, because remember on the 1 hour candles, we're at a bit of a resistance level, okay? And if we get a breakthrough and you do go in on a buy stop, okay, if it goes high enough that it breaks through, where's the next stop that you might take on a buy stop that you might take profit? And I'll draw you a line. I'm not saying you should only go after the sell stop. If you get confirmation of a breakthrough on the way up and it breaks through that 1 hour resistance, you might take profit around 61.15. Exactly. Good, Paul. I'm looking at the same spot. Resistance here, breakthrough, back down, resistance, resistance, resistance. So somewhere before, and I like to get out a little early, so maybe I would get out 61.1 instead of 61.15. Just before the resistance, right? So if I get in on a breakthrough, which I wouldn't have yet, didn't break the 1 hour resistance, it's testing it, didn't break through to where I would get in on a buy stop yet, but I might have a pending buy stop up here and a pending sell stop down here, because it's one of those days. If it breaks through, then you might get some wandering to that next level, okay? And so very interesting setup here where you could go after a potential buy and a potential sell, both of them set up waiting for the breakthrough on the small candles, with, in both cases, maybe only a 50-cent movement that you're going after. 50 cents in either way. You might say, well, 50 cents on oil, why would I want to scalp only 50 cents? How much do you make if you have a one lot position on a 50-cent movement? Anybody know? One lot of oil has 1,000 barrels. 50 cents movement makes you $500. Good. I see some math majors out there. Exactly. Minus some of the spread, right? Spread takes a little bit of it. So maybe you make $400 or $350, but man, that movement, look how long this 50-cent movement takes. Look at this movement here. The last time it hit the resistance and dropped, how long did that take? 1 hour. To make $350 in 1 hour, hey, I'll take it. Not a lot of jobs pay that much, right? And how much are you risking? Maybe 12 cents to the other side of the resistance once you decide to enter. So you could be wrong twice and right once, and you're still profiting. You lose 12 cents. You lose 12 cents. You make 35 cents. Hey, it's okay. You still make a couple $100 potentially on that sort of situation. So, and really, you should be right at least 50% of the time, right? A monkey can be right 50% of the time. Guessing, flip a coin, you could be right maybe 50% of the time. So if you start being right a little more than 50% of the time, then you really start to see the profit level increase, right? And so it's never about being right every time. It's about being right enough of the time to profit, right? And some strategies you can be right 40% of the time. You can be right less than you're wrong and still profit on this type of setup quite easily, okay? You just want to avoid as many of the false signals as you can by widening the strike zone a bit to be patient on your entry point maybe waiting for breakthroughs to confirm, and then also being patient on your stop loss, putting your stop loss far enough back that you don't give up on it too early necessarily. Okay, so let's look at gold. Usually when oil's going up, gold's going down. But what do we see? 1 hour candles, gold's going up today too. So pretty interesting. Oil's trying to go up and break the resistance right now. It hasn't, right? But it's trying to, and so is gold. So this is an interesting situation. What I might read into the markets right now, as I look at the 5-minute candles, gold broke the resistance right here. We see right there, gold broke through a bit. So that makes me feel a little bit better about oil maybe dropping back down, if you understand what I'm saying. Most of the time, not always, but most of the time, as oil is breaking through, as gold is breaking through resistance levels, then oil tends to be more likely to break support levels rather than climb. Okay, so that's something to keep in mind. Sometimes you can get confirmation from one asset to help you feel stronger about what you think another asset might do. Okay, so a little bit of a breakthrough on gold. It was a bit of a false signal maybe. You see it broke through, and then what did it do? It came right back below the support. Many times the second breakthrough is the real movement, right? So what could we do here? What could we wait for before we would buy on gold? A second what? Again, waiting for confirmation before you make your move, right? You might wait for a second breakthrough of the resistance before you buy. And it looks like it's trying to do that right as we watch, right? So if it gets somewhere up here above this resistance again, let's look at the 1 hour candles and see if there's some other resistance. There isn't, right? Not on the 1 hour. Let's look at the 4 hour. It broke the 4 hour resistance already. Okay, I see the next resistance level up here, right there. You see this wick? That's at 1486.7. That's about $1.50 up is the next resistance level. Right here on the 4 hour candle. Fezile, as far as I know, everybody's hearing me okay. All right, so by the way, this will be posted within a few, or by tomorrow morning. Okay, this will be posted on the YouTube channel. So go to AlphaTrade's YouTube channel, click on the English webinars page, and you'll find all the webinars are posted there. Monday evenings, like now, are posted by the next morning or early afternoon, and then the webinars on Tuesday and Wednesday or Thursday, depending on holidays, they're done earlier. They're posted same day by later in the day. But this is looking like a potential rise here, has potential for another $1.50 rise. Okay, potential for another $1.50 rise. And if we're scalping, okay, it broke the 4 hour candle resistance here. The next 4 hour candle is up $1.50. So we come back, you're waiting for breakthrough of this resistance again to potentially buy again on gold. Okay, so technically speaking, you could take a shot if it breaks through a second time to buy on gold with your stop loss somewhere back down below this resistance level down here. Okay, and maybe I put my stop loss 50 cents down to try and make $1 on the way up, getting out a little before the next resistance level. Okay, just some ideas. Technically speaking, scalping opportunities, waiting for confirmation on breakthroughs on the 5-minute candles, looking at the 1 hour and 4 hour candles to see where the next resistance or support level is, understanding there's no guarantee to win on it, but knowing the way things have been trending today, it very well could be a nice opportunity. Okay, so waiting for a breakthrough for a potential confirmation of an uptrend with a second breakthrough of this resistance level here. Okay, let's look at some other opportunities. NASDAQ. Makes sense if gold is breaking through resistance, small resistance levels. I give it that, not huge resistance levels, but small resistance levels. Then makes sense that the NASDAQ might be pulling down. And look, everything's starting to make sense now today. Gold's pushing up a bit more. NASDAQ is dropping. By the way, Yeah, I'm on NASDAQ right now. We can take a look at Dow Jones as well. It'll be similar, I promise you. Most of the time anyways. We'll take a look at the S&P 500 also. So NASDAQ is downtrending on the 5-minute candles. If gold is going up, that kind of confirms things. If the indices are pulling down now and gold breaks through on that resistance, maybe you feel even better about buying on gold because the indices are downtrending. Okay, you start to see, you can look at multiple assets to get confirmation technical analysis wise that when certain things are going one way, most of the time something else is going the other. For example, when the indices are dropping, usually gold is climbing. Okay, not all the time, but we're talking about percentages. What happens more often than not, and making up your mind whether to make a move, right? So at the same time, if gold is breaking the resistance on the way up, then maybe you expect the NASDAQ not to break this resistance, but to go down. So that might confirm in your mind that if the NASDAQ returns to, let's say, this resistance level, maybe you sell rather than buy, right? Because maybe you trust this resistance when you see that gold is climbing. So looking for confirmation between assets that tend to be related to each other to give you one more thing on your checklist to say, okay, I see a downtrend below a resistance level, and I see an asset that usually correlates in the opposite direction, uptrending. So, okay, now I'll make my move. Many times that's just enough to avoid false moves and get in on the correct one. Looking for asset correlation. By the way, if there was good news out of China, what tends to happen on the Australian dollar? Up. Okay, let's look at the Australian dollar. Why not? Australian JPY, 5-minute candles. Let's go to maybe 30-minute. And what do we see has been going on with the Australian? More up than down over the past days and week, right? Why has the Australian been climbing so much? Because everyone said, hey, US-China are going to sign phase 1 trade deal. Has that momentum died? Looks like it. Looks like the momentum, the strong upward surge of the Australian dollar against the yen has fizzled out a bit. Why do I say that? On the 30-minute candles, I see a downtrend is starting, right? High points getting lower now. High points are getting higher, 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 and now reversing from a lower point, okay? So that's a sign that momentum has died in the markets, just like we've already seen. Some of you might be wondering, why does the Australian dollar tend to strengthen when there's good news out of China? Because China is the #1 buyer of Australia's #1 export. So as China goes, so goes the Australian dollar many times. Iron ore is the #1 export out of China, out of Australia. The #1 buyer is China. So if there's a trade deal and that's viewed as good news for China, then that tends to strengthen the Australian dollar. And that's what we saw over the last week. It was very predictable. Easy trading strategy to go with the Australian dollar on breakthrough moves. Okay, resistance level, resistance, resistance, breakthrough, buy on the Australian, you see it go up. Support level on the Australian, buy because good news out of China, it bounces off the support and respects it. Resistance level, resistance, 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 breakthrough, buy on the Australian dollar. Why? Because you got confirmation of an uptrend on the breakthrough and good news out of China, up, 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 up. Okay? That momentum was with you until right here, this was the first failure. So if you'd have bought off the support, it breaks through down, you get out on a small loss. Okay, now you stop that strategy, right? Because it failed. So you would have won over the past week or so, 1, 2, 3 times on the breakthrough strategy with nice climbs and 1 loss to your stop loss. You're asking, is there any correlation with gold and the Australian dollar? I'm sure you could find some, because why is the Australian dollar climbing? Because good news out of US-China negotiations. If there's good economic news that caused the Australian to go up, what tends to happen with gold when there's good economic news? Yeah, exactly. Good economic news, gold tends to drop, right? So you'll find some correlation. And listen, I would task all of you, whatever it is that you like to trade on the most, to take it to the next level, technical analysis wise. Don't just look at the technical analysis for the asset you're trading on. Find something that correlates with what you like to trade on most, and look at the technical analysis of that side by side. Okay, let me show you something. So if we look at gold and oil side by side, okay, here's gold, here's crude oil. Okay, when gold's going up, right? Gold's going up. We're looking at what, 30-minute candles? What's oil doing on the chart at the same time as gold's going up? Oil is, what's oil doing here as gold goes up? Yeah, Alex, the Australians, out of Australia, they do some gold mining, but it's not their number one for GDP, right? It doesn't affect the numbers in Australia. Gold doesn't as much as iron ore and coal, because iron ore and coal are a much greater percentage of their GDP than gold is. But yeah, it does have some effect. You're right. They do some mining of other minerals other than iron ore and coal, but you have to focus on those that affect things the most, that are the biggest part of their GDP. A good example on that, Paul, the U.S. is actually exporting more oil than anyone else around the world, but oil doesn't affect the strength of the USD as much as it does the Canadian. Why? Why does oil affect the strength of the Canadian dollar more than the USD if the US produces more oil than Canada? Because oil is a greater percentage of the GDP for Canada than it is for the US. The US economy is more diversified and doesn't rely so much on oil as much as Canada does percentage-wise. So you have to, as you're investigating what affects what, you have to look at not just quantity of something created, but also what percent effect does that have on their economy. Fazile, in general, gold is a safe haven. So when there's good economic news, gold tends to drop, and vice versa when there's bad economic news. But what I'm pointing out here on the chart is you can see when you put side by side assets that are related to each other, you can see a pattern. Oil's dropping right here. That was the same time that gold was going up, right? And vice versa. You find a lot of times when gold is dropping, oil's going up. Not always, right? But if you find a relationship like that that correlates more than it doesn't, right? That's the key in trading. Not being right every time. No one's ever going to be right every time. But if you can find a relationship that can improve your decision to buy or sell and avoid false signals by even 5% improvement, then in the end, that can make a huge difference on your overall P&L. Good question. Duncan, you're asking about copper. Copper is used largely in industry. You know, copper's inside electric wiring, used a lot in industry. So when there's really good economic news, you would expect a larger demand on copper. So copper tends to go up in price. And what happens to gold when there's really good economic news? People leave the safe haven gold and it tends to drop, right? So copper and gold many times have opposite correlation, right? One's breaking support levels. If copper's dropping and breaking support levels, there's probably bad economic news, which means what's gold probably doing? Many times rising, exactly. So listen, you don't want to spin your head looking at too many correlations, right? Find one that you can study and understand the best and really study it. And if you can improve the asset that you like to trade on most by even, like I said, 5% accuracy, then in the end, that can improve your P&L by an even larger percentage. Okay, it only takes a small improvement to go from breaking even to profiting nicely. Very small improvements on existing trading strategies can really make huge differences. So right now I'm looking, gold went up for the past hours and oil went up. One of them is due to reverse, aren't they? Because overall, they don't move the same way typically. So if gold is up and reached the resistance, right? Gold is up and reached the resistance. Oil is up and reached the resistance. One of them is due for a correction. You could trade down on both on gold and oil, and one of them will probably make a huge movement. The other might break the resistance and you take a small loss on the stop loss. So if you did a market sell on both with a stop loss above each resistance level, look, you're in the money on gold. It's starting to plunge, right? One of them is due to correct if they tend to move in opposite directions. And for the last 6, 7, 8 hours, they've moved in the same direction. So you start to get an idea about, wow, why is gold dropping right now? Well, look how much oil is up. It's due to drop, right? Let's see, Fazile, you're saying you want to master gold and the NASDAQ. Listen, strong correlation. If the NASDAQ's going up, that means good economic news. What do you think gold's going to do more than likely? If NASDAQ or any major index is climbing strongly, what do you think is going to happen to a safe haven asset like gold? I don't think you'll find a hard time finding a relationship there. Fazile, if you want to ask your account manager to contact me, that's fine. Or you can contact me directly, t.fry@avatrade.com, okay? You can contact me directly. If you don't have an account manager, I'll be happy to help you directly, okay? Yeah, exactly, Farhan, I agree. Alex, if a major index like the NASDAQ, which represents a broad interpretation of the overall economy, is breaking through resistance levels and climbing, if gold reaches a resistance level, it's probably more likely to respect it and drop, right, than to break through. Sure. Email address, and please, if you have an account manager, communicate through them. In the chat, someone asked me to put my email address, t.fry@avatrade.com. There it is. Okay, that's my email address. You're more than welcome to email me. Okay, so before we end things, any questions? We're looking for confirmatory movement, and we can see what's happening here with gold pulling back down, with oil being up. They both went up. One of them should drop. Right? They're not supposed to keep going in the same direction. You could trade down on both and put a stop loss at the top of the resistance on both. You have a large potential for drop on both right now. And the one that continues climbing, you take a small loss, and the other one you have potential for a much bigger gain. So in this case, I'm not trying to be right. I'm not trying to guess which one's going to correct. I could trade on both of them with small risk on both above the resistance, with a much larger potential profit to the next support level on both. Okay? All right, guys, good luck. Looks like gold and oil really are set up nice for a move like I'm talking about here. But only do what you think is right. Certainly you shouldn't make any moves because I think I like the idea. It should be because you understand the market and what we covered, and you make a move because it makes sense to you. Okay, with that said, thank you all for joining. It's been a nice session. There have been some good questions, and there certainly are some nice movements, even in today's subdued holiday market. Nice market for swing trading so far today. All right, bye, everybody. Thanks for joining, and we'll be going again tomorrow, and then instead of Wednesday, because it's Christmas Day, I'll be taking a break from the webinars on Wednesday, and we'll be back at it on Thursday. Wednesday's typical session will be at the same time Thursday instead. Okay. All right. Happy holidays and happy New Year as it comes in. If I don't talk to you tomorrow or on Thursday. All right. Bye for now.